Welcome to this explainer. Today, we're totally dismantling the traditional corporate ladder. We're diving deep into Robert Kiyosaki's financial blueprint, and I'm going to show you exactly how to shift from just trading your time for a paycheck to actually engineering ultimate, multi-generational financial freedom. Think of this as your masterclass in wealth building. We're moving way past the old, tired advice of just saving 10% of your income. Instead, we're going to look closely at the exact framework that separates the people who constantly grind for a living from the ones who strategically build lasting enterprises.
All right, let's take a quick look at our agenda for today's strategy briefing. We're going to cover the cash flow quadrant, security versus true freedom, core business and real estate, paper assets and commodities, time and digital wealth, and finally, the ultimate asset.
So, diving right into Section 1, the cash flow quadrant, where we'll be understanding income types. Now, this quadrant concept maps out basically the entire modern working world. Everyone earning money fits into one of these four categories. You've got the E and S on the left, and the B and I on the right. And you should really treat this as a crucial diagnostic tool. Your current strategy determines which side of this line you fall on, and more importantly, it dictates exactly where you can go. We're not just labeling your job title here, we're actually evaluating your personal business model.
First up is the employee quadrant. This represents salaried workers who, at their core, trade their time for a paycheck. And look, whether you're a junior clerk just starting out or a highly paid Fortune 500 CEO, your income has a rigid, mathematical, hard ceiling. And that ceiling is your time. We all only get 24 hours in a day, right? If you stop clocking in, well, the money stops flowing. It's an inherently unscalable model because your earning power is entirely dependent on your physical presence and your active labor.
Next down on the left is the self-employed quadrant. Now sure, you've gained some independence here, but you've kind of just become your own micromanager. Think of a freelance developer, an independent consultant, or a specialized contractor. You own a job, but you don't actually own a system. If you take a vacation or get sick, your business takes a vacation right alongside you. You're still trading hours for dollars just on your own terms. It's that classic solopreneur trap where you literally wear every single hat, making yourself the ultimate bottleneck to your own growth.
Now let's jump across the line to the right side. The business owner completely shifts this paradigm. This is where you build scalable systems and lead dedicated teams to generate your income. It's the absolute essence of true leverage. A successful leader in this B quadrant focuses on standard operating procedures, really smart hiring, and delegating, not just delegating tasks, but true authority. Because of this, they can actually step away from their enterprise for a whole year and come back to a more profitable operation. The system, the brand, and the team are driving the growth, not the founder's personal sweat equity.
And finally, sitting at the absolute pinnacle, we have the investor. Here, capital is your employee. Instead of you working for money, your money works tirelessly for you. Whether you're putting funds into broad index funds, angel investing in startups, or funding massive real estate developments, your capital is clocking in 24/7. It doesn't take sick days, it never asks for a raise, and it scales infinitely, based purely on how well you allocate your capital.
Moving right along to Section 2, security versus true freedom. This is what we call the subdued divide.
So the fundamental divide between the left and right sides of this quadrant is actually totally psychological. The left side is driven by this deep desire for safety, basically craving the illusion of a secure paycheck. But true wealth builders on the right side, they know that relying on just one employer or one stream of active income is incredibly risky, especially in today's economy with all the corporate downsizing and rapid tech shifts. So they gladly trade that false comfort of a predictable salary for the calculated risk of building assets. Because assets, and literally only assets, can buy back your ultimate freedom.
Okay, let's get into the practical stuff with Section 3, core business and real estate, which are the first two pillars of wealth. Kiyosaki gives us an incredibly powerful mandate. The richest people in the world build networks. The rest look for jobs. Making that transition to the right side of the quadrant requires some intense, upfront, heavy lifting. Building a business isn't about finding some quick hack or an easy payout. It's about laying the deep plumbing for lifelong automated cash flow. You have to be out there, actively building your network, constantly upskilling as a leader, and really embracing the friction of taking an idea from 0 to 1 out in the marketplace. And right alongside your business, real estate is an absolute heavyweight asset. The practical strategy here relies heavily on leverage, specifically utilizing what we call OPM, or other people's money. By using strategic bank loans to buy cash-flowing properties, like apartment complexes or commercial spaces, you create this incredible cycle.
You essentially let the tenants pay down your debt while you're building long-term equity, capturing tax advantages, and quietly pocketing passive monthly income. It really is one of the most reliable blueprints out there for escaping the traditional rat race.
Let's pivot slightly to Section 4, Paper Assets and Commodities. This is about market and natural wealth.
Now, if you're currently tied up in a super demanding full-time job and you just don't have the bandwidth to launch a startup right now, paper assets are going to be your easiest entry point into that investor quadrant. Equities, bonds, and mutual funds are incredibly powerful tools, but, and this is a big but, only if you treat them as a disciplined strategy, not a casino. Success here is not about day trading on pure emotion. It requires a relentless commitment to improving your financial literacy, understanding broad market cycles, and really mastering concepts like dollar-cost averaging to build sustained wealth over time.
We also have to remember that fiat currency fundamentally loses its purchasing power over time because of inflation. So as a strategic macro hedge, Kiyosaki points to natural commodities: gold, silver, oil, and agriculture. Unlike paper promises printed by a central bank, these are tangible, finite resources. They hold an intrinsic historical value that can fiercely protect your overall portfolio's purchasing power when standard currencies inevitably start to devalue.
All right, up next is Section 5, Time and Digital Wealth, looking at some truly modern assets.
Time is arguably your most aggressively depreciating asset. Why? Simple: compound interest. Starting your investment journey at age 20 versus age 30 doesn't just give you a 10-year head start on saving, it creates an exponential mathematical advantage that is basically impossible to catch up to later. The snowball effect of returns generating their own returns means that strategically deploying your time and capital early on is an absolute masterstroke in wealth creation.
And beautifully coupled with time is digital real estate. Guys, we are operating in an unprecedented era where you don't need millions of dollars in venture capital to build highly scalable assets. Things like media properties, digital products, software, and affiliate networks have near zero marginal costs of reproduction. They require incredibly low overhead to launch, but they offer global reach and extraordinarily high margin cash flow. Once you build them, these digital ecosystems just operate independently, literally paying you dividends while you sleep. Which brings us to our final core topic, Section 6, the ultimate asset, which is all about guarding your wealth.
As Gandhi so wisely noted, real wealth is our health. Without your physical and mental vitality, your massive startup exits, your expansive real estate portfolios, and your high-yield stock dividends are, well, practically worthless. Health is the absolute foundational infrastructure that supports literally everything else you build. If that foundation cracks, the entire financial empire you've spent decades engineering on the right side of the quadrant comes crashing down right along with it.
Because of that, you have to audit your physical habits just as strictly as you audit your financial balance sheets. Junk food, excessive alcohol, smoking, these are essentially terrible investments with guaranteed negative returns. They don't just drain your wallet today, they literally steal the future time your investments desperately need to compound. Not to mention, they siphon away the raw energy and sharp focus you need to effectively execute your business strategies.
So we've mapped out the quadrant and covered the 7 core pillars of wealth. And I want to leave you with this ultimate strategic question to wrap up our explainer. Look closely at your calendar and your bank statements from just the last 30 days. Do they prove that you are actively building a system for total freedom? Or do they prove that you're just trapped in a very well-paid hamster wheel? The blueprint is right in front of you. What you do next, well, that's entirely up to you.